Hello guys, um, as per the request of Bilal, I'm trying to show you, I'm creating a video here to show how to use trailing stop loss. For that, I'm going to use the stock portfolio here, and from this portfolio I'm going to use IPHI, which is the only stock that has come to profit. It's showing a 3.1% profit. So I'm going to put the other two is so down below that I'm not using trailing stop loss right now on them. So to use a stop loss, the simplest way to do is it's click on it, which will open its sale box, the stock box, and then you go down and click on close position. When you close position, it will give you an option. It will show the current price, which is 180.54, and you have to use the order type as trail. When you use a start order type as trail, first thing you have to put is the stop price. The stop price obviously means the price. If the price falls from 180.54 to that number, it will automatically get sold. And when you put the trailing stop loss, generally you should put around 6% below, 5 to 6% below this 180 price. So which would be around 6%, would be around $12. So I'm putting 168 as the stop loss. Remember, I bought it for 175, so even at 168, I'm going to make a loss, but I'm hoping that it will not fall to this level and it will keep on going up from here. That's why I've put stop loss at 168. Now the next thing to do is to put the trailing amount. So trailing amount, you can use an amount, exact amount, or a percentage. If you want to use the trailing amount, you have to go back to TradingView and check out the ATR, which is this average true range. So I'm looking at the average ATR, average trading rate, true value, true ATR, average true range of IFI for the last 1 year, starting from last March to this March, and you'll see that it has never gone above 6.5 roughly. This is the highest point, 6.5. So then, to be safe, I can put a number of $8. Instead of 6.5, I'm putting, to be safe, an $8 price here. So the trading amount as $8. Okay, so that's it. Now we have $8, it's amount, and instead of day, good to cancel, GTC. That's about it. So you can go ahead and put and slide to submit sell. That's the easiest way to do it. You can I recommend you do it this way, but there's another way. We can put the trailing amount. Instead of amount, we can use a percentage, and what that percentage should be can be calculated can be seen using the super trail. So super trail is an indicator I bought from Angus, and if you look at the super trail, it generally shows you the fluctuations of the price from the and how much it fell and at what level. If, for example, this is a 12% trailing super trailer, if you put a 12% trail, you'll see a lot of times it will get sold here because of the fluctuation, market fluctuations. It gets sold. So you don't want that. What you want is the stock to run, the profit to run for a long time. You don't want extremely big gap here or trailing gap here, but you want a certain amount, the minimum amount that will give you a minimum gap that will allow the stock to run for a long time. So instead of 12%, if we put, for example, 20%, then and check what happens here. So when we do that, okay, now it's 20% gap, and at a 20%, it only gets sold during 2 periods of this volatility. Now you may argue that if I want to run it for a long time, see, even after this big drop, it again came back here. So why would I sell it at here and again buy it at this price? So you may argue that I want to give it a bigger gap so that it can run, for example, from here $60 to $180. So it's 300%. So to give that 300%, let's try out, for example, a value of 30%. So if I give it 30%, what happens? If I give it a 30%, still I get, now in the last 1 year, it would have got sold, say for example, one time only. So if that happened, so we would have bought it at $50 and sold it at $102, which is 50%. Again, we would have bought it here at this price, 123, and never sold it even if it's 182. $60, 120, again 50%. Even at this 50%, this big the turmoil that we saw in March, it would not get sold. It will keep on continue to go up, and with a big gap like this. So I think this is again 30% is a little bit too much. So this was too much of a turmoil. We should have sold it here, I feel. Okay, so I think 80%, 30% is a little too much. So I'll go back and put and test out 25%. Let's see what happens. Yes, even at 25%, the same thing happens. I don't get sold out even in this period. So I will settle for 25% here. Okay, I can try a little bit more and maybe it's 24%, 23%. But instead of that, I'm simply going and putting a 25% trailing stop loss here. Remember, this is percentage now, so 25%, and that's it, 25%. So I hope to achieve at least, 50 to 60% profit from this. But remember, it's going to take a long time. So it's going to run for a long time, and we have to be patient. There's no hurry. So for example, if we bought it here in October and let it run for 25%, then we have got now, even after for 6 months, it's still running, and we are gaining from $80, $94 to $180. So 100% gain we will get, and will not use our psychology to sell it, etc., etc. Okay, so that's what I just did for IPHI. I'm going to do the same thing for each of the stocks that will come close to profit, to green, and I recommend you guys also do the same. Thanks, bye.